Hi, welcome to the Market Alert for Wednesday, the 23rd of March 2023. So the main headline are stocks extend historic short squeeze melt up as recession and rate cut odds rise. Notice that rate cut, not increase. Yes, that's what I said last week, wasn't it? It'll be very difficult for them to actually continue to raise rates, even though Powell hinted yesterday that he was going to raise rates by 50 basis points during April and May. Well, good luck if you do that. Most shorted stocks up 20% from the pre-rate hike lows last week. And as this headline says, market doing what it does best, frustrating the crowd, because obviously with the conflict between Russia and the Ukraine, the market should be falling, but it's not. It's continuing to move to the upside. As Doug Casey said in an interview with Danielle Cambone of Stansbury Research last week in an interview, that the first casualty of war is the truth. And like I say, this is all being used for this one reason: Ukraine crisis, accelerating rise of central bank currencies. Yes, this is where we're heading, whether it's in the next year or the next 5 years, but ultimately full control of your finances by central banks and governments, a full dystopian and totalitarian mandate is in progress here to make sure that if you're not a good citizen, then your bank accounts will be switched off. And so it just saves like the likes of Trudeau a few weeks ago when he tried to freeze the assets of the truckers that protested. Unfortunately, it had a counter effect, and that was that there was a run on the banks, people trying to take the money out of the banks. But of course, with the digital currency, they can just turn off the app and you can starve on your own. As it says here, the possibilities are as endless as they are terrible. Central bank digital currencies are the death knell for the very idea of individual freedom. Absolutely spot on. So keep an eye on this one as well. Gas stations will run dry. Catastrophic scenario for diesel emerging according to the world's biggest energy traders. The diesel market is extremely tight. It's going to get tighter and will probably lead into shortages. So keep an eye on this one making its way into the mainstream, because if the price of crude oil does fall, then you can be absolutely guaranteed the engineered petrol crisis of September 21 in the UK, where they said there was shortage of drivers and BP said they were short on fuel, created a week of complete and utter mayhem, price increases which never went down. So this is another way of engineering the inflation for the devaluation of the global debt. And speaking of inflation, today we see the release of the inflation numbers for the UK, 6%. I mean, it's laughable, isn't it? Food prices are up 20% year on year, but we're only looking at a 1% increase from the previous month. Bailey will be speaking at midday, and no doubt also informing everybody that rates will be going up again in March. Powell's also out as well at midday, so we've got a joint effort there, but obviously a difference of countries. Budget release tentative, and then we've got crude oil inventories which are showing a draw according to this, but yesterday I did see that they said there was a surplus of crude now, so it's forecast at minus 700,000 barrels. And then Bullard speaking later this evening. So let's have a look at the Dow, see what it did yesterday, and obviously it continues to move to the upside. And there you can see prices breaking through the 89% retracement that we spoke about yesterday. We need to take out these two areas here, and including the 200 MA as well. That's all going to be dependent on how the UK market reacts at 7 a.m. with the inflation numbers. But I mean, it doesn't really make any difference, does it? Let's just get this market back to the all-time highs is the goal here. So we'll just keep taking out all of these targets as the market continues to move to the upside. And all of the heavy lifting is done in the morning session that I've spoken of many times. You can see there, when the stock market isn't open, when the cash market's not open, they'll use the derivatives to bring the market up. When the cash market opens, they will use this to actually offload, and that's why you get the churning effect in the first couple of hours of the Dow. As the market drops, they'll buy back, and this way they can offload. It's called the distribution phase of the market. So again, there's a twofold exercise going on here. and that is to bring the market up, or the cash prices up, by using derivatives, and then when the cash market opens they can offload at higher prices with all of the sell orders. The same in the German DAX. You can see we've continued to move higher. We are breaking through this resistance here. We tried overnight, but at the moment we're just sitting on the line at the moment. But again, after 7 a.m, I wouldn't be at all surprised if we don't see the market move up, because they'll say, well, we're going to increase interest rates. That will be already factored into the market. Should go down, but it won't. It'll continue then to move back to its all-time highs over the next few weeks. They say the war doesn't exist anymore as far as the markets are concerned. It's contained, and we are free to move the markets back to the upside now. That's all done and dusted as far as the stock market is concerned. In the currencies, let's have a look at, there we go, we've got the yen. We can see this blasting through the 158 level during yesterday, a really big move, and continuing to do so overnight as well. In the 30-minute chart, we were just long from the open. The oversold conditions were put in the day before, or the evening before, at 8:30 p.m, and then just continued all the way throughout the following day, i.e. yesterday. The pound also managing to put in a big move yesterday as well. This is interesting actually, because obviously the dollar moved higher as well, which is really odd. For a moment it moved higher and then was brought back, but they managed to smash the metals markets as well. Some strange things going on. So you can see the pound now is overbought. We're at 62%, and if the dollar moves higher, then we can expect a retracement in the pound there. And speaking of the metals, let's have a look. Silver yesterday hammered to the downside, no surprise. We spoke about this yesterday. I'm still convinced they're going to have a pop at that 200 MA, which means they'll have to take out the 50 and this area confluence of fibs. Not difficult to do, as I'll show you in the 30-minute chart. You just hammer it like this, and then you can do whatever you want to do. Bring in the volume, which you can see there as well, and then prices eventually find support at the S3, and we're oversold. We've got a lot of volume, climatic volume, and then the markets managed to trade back to the DP. It's got to get back above the DP in order to move higher. Like I say, it'll be interesting to see how it reacts to the inflation figures from the UK. I have a funny feeling they might even come out as forecast. I mean, that would be a real joke, wouldn't it? And prove how manipulated all this is. But then we have sort of seen this in the last, well, I think it was last week actually, we covered this when they announced in the mainstream media that they were going to recalculate the way the inflation, or what was in the basket, to calculate the inflation numbers. So again, sleight of hand, smoke and mirrors. So wouldn't be at all surprised. Crude oil coming under pressure yesterday. And of course we had yesterday that the war is going to end in the next 2 to 3 weeks headline as well. I mean, what absolute BS, isn't it? But it was enough to stop the crude oil market in its tracks. It's actually been up overnight to the 50% retracement, $117 a barrel, but down a bit at the moment. And in the gold market, this down slightly as well. I wouldn't be at all surprised if we don't retest the 50 and double bottom here, where the demand came in anyway, to be honest with you. Again, it's just fascinating, isn't it, how they're actually doing this. Absolutely incredible. And the dollar up slightly yesterday with the pound, with the yen. How odd. Up overnight and dropping off a bit there, which is what's supporting silver at the moment. But then again, they seem to be disconnected now anyway. There are situations where they'll both go up and down together. So some very strange things going on in the world right now, and particularly in the markets. Okay, that will do it for this one. I'm looking forward to the inflation numbers. They're out in 15 minutes time. So hopefully you will get this before those numbers come out. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.